Hey everyone. Even though some of these AI stocks have lost steam of late, artificial intelligence stocks are still the hottest ones in the market in 2024. So if you're an investor looking at these AI stocks that have taken a bit of a dip lately and trying to decide which one of them is the better stock to buy, I'll answer that in this question. I'll compare SoundHound AI, Supermicrocomputer, and C3.ai on several critical financial metrics, including revenue, operating profit, and valuation, to determine which one I think is the better AI stock to buy today. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the first metric I wanted to consider is revenue growth. And judging by this metric, the leaders are Supermicrocomputer and SoundHound AI with 103% and 80% revenue growth respectively in their latest quarter, followed by C3.ai with 17.6% revenue growth. Looking back over greater than just one quarter, SoundHound AI has demonstrated better revenue growth over the previous 2 years, year and a half or so. Going forward, looking out, which company is likely to grow revenue at a higher rate over the next, let's say, 5 years? That would be SoundHound AI. Supermicrocomputer over the next 4 to 8 quarters might grow at a very fast rate, but as it builds out, it's expected to slow down over the next 6 to 8 quarters is when Supermicrocomputer's revenue growth rate could slow down. SoundHound AI, meanwhile, is gaining traction. Its audio technology, it just made an acquisition that expands its base with restaurants, and it has a longer runway for growth compared to Supermicrocomputer. C3.ai is likely to be third place in terms of revenue growth among these high-flying, fast-growing stocks. It takes a longer time for C3.ai to implement its service, make a sale, and it hasn't demonstrated very fast revenue growth in the last year, year and a half, although the company did release its newest AI software that management says is getting good traction with companies. So it is doing better. It did re-accelerate revenue growth. Still, I expect C3.ai will grow the slowest out of these three high-flying AI stocks. So the next thing I wanted to compare these three on is their operating profit margin. This measures how much profit is left over after the company makes its sale and accounts for all the expenses, including sales and marketing, research and development, depreciation, amortization, stock-based compensation, etc. And then that leaves the operating income. When you take that operating income and you divide it by sales, it gives you the operating profit margin. And what you'll notice is 2 out of the 3 here are significantly negative. SoundHound AI at negative 139%, although improving quickly, and C3.ai at a negative 104%, although going in the wrong direction, and then Supermicrocomputer at 9.4%, relatively flat over the last 5 years. SoundHound AI had significant restructuring in early 2023. That helped the company improve its operating profit margin as revenue grew by 80% and costs decreased. Supermicrocomputer, its operating profit margin is not likely to move higher. Management team saying that they're undertaking a land and expand strategy, meaning they're offering introductory pricing to get their foot in the door and then hoping to expand with their companies, their clients. That leads to typically lower profit margins compared to strategies or when you have higher demand than you have supply like Nvidia does. That leads to expanding profit margins. C3.ai, meanwhile, no real signs that its operating profit margins are going to improve meaningfully in the near term. It's still trying to gain traction with its service, offer it to more companies, demonstrate to companies how its enterprise AI software can improve their business. And once it can prove that, then it can start to demand higher prices. Then it can stop offering these free trials to get customers. Customers will line up to get their service if they indeed prove that it's worthwhile, that it brings in a good return on investment. The next thing I wanted to consider is their return on invested capital. This measures how good a company is at taking money from investors, putting it into projects and services, and generating profit from those projects and services. Again, 2 out of the 3 are negative in this metric. C3.ai not making very much progress. SoundHound AI negative 120% but making rapid progress. Supermicro Computer with a very good 30.59 return on invested capital. Generally speaking, anything above 12% I consider as solid. And then when you get above 20 and 30%, that starts to be really good. Supermicro Computer is in that category now in really good, doing a good job taking investor money, turning it into profits at an effective process in an efficient manner, while C3.ai and SoundHound are still trying to get there. They're still trying to find their path forward. So I also wanted to consider the debt to equity ratio. I wanted to see how much debt these companies have in relation to their equity. And SoundHound AI is the most indebted here at the 2.993 debt to equity ratio, followed by Supermicro Computer with 0.122, and C3.ai has zero debt. It's got the most pristine balance sheet out of these three. Hundreds of millions of cash it has on the balance sheet with zero debt. So it has the best balance sheet. It wins in this metric here. And finally, I wanted to compare these three on valuation, and I chose to use the forward price to sales ratio because C3.ai and SoundHound AI are negative in profits, they're negative in cash flow. So I was limited in the metrics I could use where I could compare all three of these. And so I chose the forward price to sales ratio. Now in this metric, SoundHound AI is the most expensive, trading at a forward price to sales of 12.2. And nearly half that valuation is C3.ai at a forward price to sales of 6.8. And a third of that valuation is Supermicro Computer trading at a forward price to sales of 2.649. Now, while SoundHound AI was growing very quickly, faster than the others, improving their critical financial metrics faster than the others, it was still significantly negative in some of the critical financial metrics, including the operating profit margin and the return on invested capital. Supermicro Computer, meanwhile, is growing revenue rapidly, is positive in terms of operating profit margin, generates a solid return on invested capital, and is not too indebted in looking at its debt to equity ratio. So out of all three of these, if I had to pick one AI stock to buy today, I would pick Supermicro Computer at the forward price to sales of 2.649. I don't think the other two deserve much of a premium valuation over Supermicro Computer. You can make the argument that SoundHound AI deserves a premium valuation over Supermicro Computer, and you can make the argument for C3.ai as well, given that C3.ai is a software company and its profit margins, when or if it reaches a higher level of revenue, could potentially be much higher than Supermicro Computer in the long run. However, for now, it hasn't demonstrated that it will get there. And so that's the risk. It's too big of a risk to offset the higher valuation as well. So for all those reasons, I would pick Supermicro Computer today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.